Bulls prevail in a volatile session as markets gain for the fourth straight day. Sensex recovers 350 points to cross 36,000 mark. Nifty gains over 50.
Global markets perk up amid hopes of progress as the US-China trade talks draw to a close. Almost all Asian markets rise over 1%.
Weakness in the Indian rupee bolsters IT stocks. Infosys leads the rally amid reports that the company will consider a buyback on Friday.
IndusInd Bank reports a stable set of third-quarter numbers. The stock rises over 1%, even as asset quality deteriorates marginally. Banks, it assures that adequate provisions have been made, IndusInd Bank that is, adequate provisions have been made for the IL&FS exposure.
Shares of print media companies rally in trade after Information and Broadcasting Ministry hikes the rates for advertisements by 25%. On the other hand, steel stocks are the top losers thanks to profit booking. Well, those were the top 5 headlines on a day when the markets left your head spinning. Green one moment, red another, green again, red again. But finally, we ended up in the green. It's 6 hours of exciting and choppy trading, and we are going to tell that story in just 5 headlines. So, welcome to Markets Today Talk Back. With me is my colleague Prashant Nair. Hi, Prashant.
Lata, hi, absolutely. Mid-session scare almost, and the market collapsing, and then it pulling right back by close, and it was a very respectable close. Over the next 30 minutes, we will talk about all of that. We'll talk about the drivers for the market and take your questions as well. Joining us to answer your questions are Angel Broking's Mayuresh Joshi, Ashwini on the charts. Gentlemen, both of you, thanks very much for being here on the show. But let's rewind the clock before we hit the Q&A part of the show and take stock of what really went on. Lata.
Well, I don't know how much I can explain this kind of rockiness. We started off with relatively positive cues, and that was because of President Trump's tweet that the talks with China are going strong. That led to Wall Street finishing strong. It also led to Asian markets finishing between 2.5% and 1.5% higher, depending on which market you pick. Europe, again, showed about 1% gains, no matter which index you picked. In that backdrop, the Indian indices were not quite performing as well as the others. At the best of performance, it was about 0.5, 0.6 higher. It didn't get to the 1% mark that the other indices got. And it also saw this big midday scare, probably basket selling, probably crude scare, because crude is moving towards the 60 rupees mark, $60 mark, leading to the rupee going towards 71 per dollar. So all those were possible negatives for some parts of the market, positives for some parts, but the choppiness did not last long, and towards the end of the day we saw a fairly big recovery coming back. The lead gainers were private banks, IndusInd, as well as, of course, Axis, which was leading from the front. Kotak once came out and performed. It has not been a performing stock. IT stocks did well because of the rupee. Tata Motors, all globally exposed stocks did well. IT was doing well for the rupee. It also was because the global economy is suddenly seen slightly better than we thought of it before the Trump tweet. So that's what led the Nifty higher. But more specific action, Prashant, that stood out for you?
As you said, Lata, I mean, the story so far, I mean, the last couple of days has been banks. So, I mean, I think...
And that was the story again.
Once again. So, banks and private banks, large banks, continuing to do very well. So, IndusInd Bank, again, in a way, in a small way, it mirrored what happened to the market. When the numbers came out, the stock slipped. And then later it picked up and ended about 1.5% higher, pulling the Bank Nifty along with it. Axis Bank was up 3%. There was an upgrade from Citi. ICICI was up 0.5%. There was HDFC Bank, Kotak Bank also in the 0.5%, 0.75% range in terms of gains. Other gainers, HDFC Limited, ITC, Aisha, Bharti Airtel. I mean, there were Lever, etc. as well, which were up 3/4. But, I mean, these are the top gainers, at least on the large cap space. Oil and gas stocks were weak. HPCL, Gas Authority, BPCL. I mean, the 3 top losers in the Nifty were from the oil and gas space really today. What happened as far as mid-caps go? Praj Industries continues its up move. IDBI came up in a very large way on big volumes. ICICI Pru, which has been very weak for a couple of weeks now, was up 3.5%. There was Kiri Industries, 1 million shares on it, 8% plus. L&T Infotech was up 4%. HT Media, of course, and we read that last headline out, 20% higher by close. Mid-cap losers, grew Bandhan, I mean, straight off the bat, continue to lose. JSPL, I mean, actually metals were weak. JSPL, SAIL, Delhi Bilcon was down, and there was NMDC, which lost ground as well. Lada.
Okay, with that, let's find out where do we go from here. It's 4 straight days on the trot that we have risen, Ashwini. What's your assessment of the way we rocked today and rocked back?
See, today it was, important to see that there are first chinks in the appearing in the armor of good macros, which is, crude prices, rupee, bond yield, etc. And that's where, the financials have kind of gotten into some amount of volatility. So that way, today is the first time you had this sort of intraday volatility, and often such volatility happens towards the higher end of the range. So that way, you should be now trading on both sides, and chances are that we are within 50-100 points of a top, maybe even on financials. The Nifty, I don't know, looks like it's not able to move forward as smoothly now, but definitely it's not blue skies for the financials or our macros. So that way, each time you get a gap up or a gap down, taking the other side is a useful strategy.
Okay, so maybe we get a gap up tomorrow. Ashwini is saying that probably makes sense to sell the bounces by the sell-offs. Absolutely. Okay, let's move on to the second story. Global markets looked up in trade today after US President Donald Trump tweeted talks with China are going very well. Asian indices ended the day in the green while Europe started on a positive note. Dalal Street failed to participate in the rally, though. I mean, the 1% moved, it was not visible here. Adrian Movat, emerging market equity strategist, believes that the first half of 2019 will be a good one for global equities. We spoke with him earlier. Listen in.
I think equities can have a very good half in the first half of 19. Remember, we're starting after a big fall in markets in the final quarter of last year. And the markets were falling because of this fear around the US economy. And the data that's coming out of the US economy really doesn't support this recession fear. I think the employment numbers are absolute Goldilocks. You could get this environment in the US where they create a lot of jobs, and that increases the participation rate, so it reduces the threat of inflation, but gives you a very strong economy. And if that is the dynamic, then US equities and global equities are very cheap at this point in time. If we could also get some good news on the trade between the United States and China, that would be very helpful. I have to say it's difficult really to make strong predictions around that. Both Lighthouser and Navarro have very strong views about trade, and the president is behaving in a way that is very difficult to predict.
All right. So that's the inkling that if there is trade talk, then trade truce, then there is perhaps a good 6 months for the global economy. But let's see how that plays out in India, since we have a political dissonance. I'll come to the third headline. Tech stocks were the day's biggest gainers, owing to the rupee weakness. Dollar strength and crude price rise weighed on the Indian unit. The Nifty IT index was a 0.25% of the point higher, led by Tech Mahindra, Wipro and Infosys. Infosys, of course, was up also because the company told the stock exchange that they will consider a buyback program and or a payment of special dividend along with their third quarter results, which are due on Friday. Rima is here with more details. Rima.
Yes, along with numbers on the 11th of January, that's Friday, the Board of Enforcers will also consider the proposal of a share buyback as well as returning cash to the shareholders via a special dividend. Now, the company's capital allocation plan for 2019 stated that they will pay 70% of the free cash flow as dividend. Over and above that, they will return $2 billion to the shareholders. Of the $2 billion, $400 million has already been returned in the month of June of 2018 via a special dividend of 10 rupees per share. So we are left with $1.6 billion, which could be returned to the shareholders via a buyback or a special dividend or a combination of the two. Now, this has been widely speculated by the street because there needs to be a one-year gap between the last buyback and the current buyback, and that one-year moratorium for a buyback concluded in December of 2018, which is why the street has been expected that in the January numbers, the company will announce this, the planned payout of this $1.6 billion. Now, Antique says that if the company returns the entire amount via buyback and they put the buyback price at a 15% premium to the current market price, they can return 3.3% of the equity. If the entire amount is returned via a special dividend, then it implies about 22 rupees per share. But apart from the buyback and the special dividend, the focus will also be on the numbers, because there is a possibility that the company can actually up the lower end of its full year guidance. So the guidance from 6 to 8% can become 7 to 8%, considering the momentum the company has seen and the strong deal wins. So while they will hold on to their margin guidance of 22 to 24%, there is a possibility of the revenue guidance being upped at least at the lower end, and that will also be a big positive for Infosys if it comes.
Reema, thank you very much for that. We have Venkateshwara Raju, who is calling us from Andhra Pradesh, and he's got a question on TCS. Mr. Raju, thanks for calling in. What's your question?
Good evening. My name is Dr. Raju. I hold around 50 shares of TCS since last 5 months, and I can hold for long term. Kindly suggest.
Okay, can hold for the long term. Price is 1,884 right now, but I mean, you're a long term investor, so it doesn't matter in that sense. But let's put it to Mayuresh. Mayuresh, what would you tell Dr. Raju? TCS.
Afternoon, Prashant. Again, it's a clear hold from my side. Largely, again, I think the digital revenues, which are contributing 28% to the overall top line, the kind of TCVs that TCS has got, and the execution parameters thereof are holding the book in very, very good stead. The second element, as Reema was also pointing out for the sector as a whole, I think the revenue guidance, both in constant currency and dollar terms, I think that should be held up by TCS as well, though I think they don't give guidances. But again, I think the dollar revenue guidance should be pretty strong, and that will effectively also be displayed in terms of EBIT margins actually remaining very, very strong as well. So I think from an earnings profile, from an execution profile, the utilization level across its bench strength, and the possibility of reducing its attrition rates, I think that does hold the company in good stead. From a valuation perspective, it's a tad bit expensive compared to its peers, but I think that valuation premium might persist because of the consistencies that it probably throws out in its numbers. So a clear hold from my side.
All right. Thank you very much, Mayuresh, for that. And thank you, Venkateshwara Raju, for calling in. We have to take a break on that note, but stay tuned. We have more headlines to cover the market's performance today.
The market, of course, ending about 50 points higher. This after some amount of volatility mid-session. We are, of course, recapping the day. We are taking your questions. Mayuresh Joshi and Ashwini Gujral are with us. They've been answering your questions. We got through 3 of the top stories. So let's move on to the 4th one. It is the start of a fresh new earnings season. Innocent Bank was the first to report the 3rd quarter numbers. Net profit saw a marginal increase to 985 crores on the back of higher provisions and contingencies, while asset quality deteriorated marginally. Net interest income was also below expectations. The stock ended about 1.5% in the green, though. It was weak initially, right after the numbers came out, but then it picked up towards the end. Abhishek Kothari is joining us with the basic numbers and some detail in terms of how the street viewed those numbers. Abhishek.
IndusInd Bank reported a mixed set of numbers. Now, the loan growth came in at multi-year high for the bank at 35% YOY, and the dreaded IL&FS account remains standard for the bank. However, on the flip side, the net interest income growth was at just a mere 21% versus the 35% loan growth, which indicated a pressure on net interest margin owing to the fact that cost of funds for the bank has increased. The other income actually aided the profit growth. So if you look at the non-fee income, that was up 104% quarter on quarter, indicating that there must have been a trading gain on account of the decline in the bond yields. The slippages increased to 806 crores. So that compares to about 419 crore in the previous quarter, indicating a pressure on the asset quality, and that led to gross NPA in absolute value increasing by 10.5% sequentially. So how the numbers stacked up versus the poll? Net interest income was at 2,288 crore. That compares to our poll of 2,371 crore on account of better trading gains and other income growth. The PAT came in at 985 crore. That compares to our poll of 811 crores. Back to you.
It will be better than estimates.
Provision for 375 crores. That provision was also has been buttressed by, we made 350 crores and we had a 70 crore floating provision as well. We have added to that provision to take up the total attributable provision of IL&FS to 600 crores. And the status of that particular exposure is that the resolution plan in its final form is still to come. But we have good reason to believe that there is enough and more security, and we will assess in fourth quarter also whether we need to make any more provision.
Okay. Well, it's quite possible that the market now has completely internalized all the negatives of the IL&FS exposure in IndusInd Bank. The bank has responded with excellent loan growth, and perhaps therefore all the negativity because of this exposure is over for now. That's, of course, one market opinion. That's IndusInd Bank ending up 1.5% higher. The other private sector banks also did very well. Kotak Mahindra Bank, after a comatose several weeks, came out and performed today. Axis and ICICI have been firing, and they continue to do extremely well. Public sector banks, on the other hand, did not fare well. Actually, there was a lot of profit taking simply because of the late rally we saw in them yesterday. So SBI, Bank of Baroda, PNB all ended in negative territory. One problem could, of course, be the rise in yields and the fear that yields will rise more because of crude and because of the pre-poll pressures of announcing large bonanzas. All that could be a little negative for PSU banks. Let's get to the question answer segment. We have Aliasgar Kambati, who has sent his question in on HDFC Bank. He has bought 35 shares of the bank for 2070 rupees, has been holding it for the last 6 months, says he's a medium-term investor, wants to know if he should hold or sell. So 2070, the buying price, 35 shares. Mayuresh, what should he do?
So Lata, I think it's a hold from my side as well. Clearly, I think the franchise is very, very strong when you're probably looking at the retail advances. They've been growing at a very, very fast clip. And when you're talking about consistency in key parameters like asset quality, I think they've maintained that quite consistently over the past few quarters. And NIMs also have got maintained over that time period. And the expectations of a strong capital adequate bank, probably having balance sheet expansion and growing at a fast clip in excess of 20% from a top line perspective as well as an earnings perspective, I think that should hold the earnings perspective, which again is at a premium compared to the others on a steady state basis over the next few quarters. So a clear hold from my side.
Okay, hold. Mr. Aliasgar Kambati, do not sell your shares. Ashwini?
See, basically, whenever you get downsides, and I think it came down till 1900, you should continue to add on and basically do an SIP every month. That can also benefit you. But understand this, that it is not something you are discovering. So the price is so well researched and everything, you will not do too much better than, say, an FD return, etc. Maybe 10% per year. Possibly things like Kotak, which are going through a bit of controversy, that could be a better addition here. and possibly the growth is also higher in Kotak. So while you can hold your HDFC, maybe buying into a Kotak for a little faster growth may not be such a bad idea.
All right, so maybe move into Kotak. That's Ashwini's view. Last story of the day then. Amongst stocks in news today, print media companies like HT Media, Jagaran Prakashan and DB Corp gained anywhere between 2 to 20%. This after the Information and Broadcasting Ministry hiked ad rates for print sector by 25%.
Okay. And on the other hand, continuing with our stocks in news, steel companies lost a lot in trade today. Tata Steel, JSW Steel, JSPL all ended between 1 and 4% in the red. The stock saw profit taking after Tata Steel reported a rather mild performance in the third quarter. It released some numbers of its sales performance in its global subsidiaries. We have a question.
Girish MP has tweeted to us with a question on Tata Steel. He's got 100 shares of the company and he basically wants to know what to do from a 12-month perspective. Mayuresh, your sense, Tata Steel?
So I think the cyclicality in this sector continues. So what you're probably hearing on the Chinese slowdown in terms of demand-supply dynamics, the LME prices, they're all pulling down the kind of performance that these stocks are exhibiting. Again, the domestic steel prices are at par with imported landed steel prices as well, which again I think makes domestic steel not so lucrative from an immediate perspective. But a large element in terms of the volume growth, the capex plan and at Kalinganagar, the stabilization of operations in its European unit, and the expectations of inventory levels actually being very, very low, both for ferrous and non-ferrous. And any positive signs from the US-China trade war talks that we're probably hearing through can give a fillip to these stocks from a medium-term perspective as well. So since he's got a 12-month time horizon, my own sense is that he can very well hold on to the stock.
Hold on, yeah. But they did report a fall of 10% in their India sales and even in Bhushan Steel, which now belongs to their stable. So there was a fall in their sales performance in the third quarter, and that's what brought the stock down, and along with it other steel stocks. The other stock that was in focus today, again a stocks in news for you, was Jet Airways. The lenders met, that is the bankers basically, to discuss a turnaround plan for this cash-strapped airline, this debt-struck airline. Sources say the creditors want the promoter, Naresh Goyal, to give up majority control and step down from the board. They are, on their part, looking at converting part of their debt into equity. Ritu Singh, who's tracking that meeting between SBI and Jet, joins us with the latest. Ritu.
That's right. Officials from Jet Airways and its partner Etihad Airways met with State Bank of India officials. Remember, SBI is the lead banker in the consortium to Jet Airways to discuss the turnaround plan for the company. We're given to understand that in the meeting, SBI made it very clear in no uncertain terms that no fresh loans would be granted to Jet Airways until the results of EY's forensic audit on Jet's book is completed. In addition, we understand, given that Jet defaulted on the 1st of January, the RBI FEP 12 circular kicks in, which means in 180 days, lenders will have to finalize a resolution plan, failing which the company would be headed into bankruptcy. So under this, they're working on a financial restructuring where a portion of the debt would be converted into equity, which means banks will end up holding stake in Jet Airways. In addition, they've also sought that Naresh Goyal, along with Etihad, bring in fresh capital into the company. And therefore, this restructuring, once implemented, would result in Naresh Goyal losing, majority control in Jet Airways. It has been made very clear that, bankers do not really want the current management with Naresh Goyal at the helm to continue, but a compromise has been reached, and we understand that they are agreeable to his son Nivan Goyal continuing in his board position. Of course, the stakeholding would be reduced significantly from 51% to under 20% once the restructuring is completed. Do remember there's almost 1,700 crore rupees of repayment due between now and March for Jet Airways, and to ease that, if the restructuring proposal is cleared by all of the lenders, it is possible that Jet Airways may also be granted moratorium during this period.
Okay, thank you very much for that, Ritu. Doesn't this prove the old adage that when you borrow 10 rupees from a bank,
it's your problem.
It is your problem, but when you borrow 10,000 crores, it is the bank's problem. We will have to see whether the bank is able to make Naresh Goyal cough up the equity or step down. Let's see what happens. Mayuresh, Ashwini, thank you very much for joining us.
Well, it's a wrap here on this edition of Markets Today Talkback. Thank you very much for staying with us.